Welcome to Trade Breakdowns, our series where we take a deep dive into the trades of some of our funded futures traders here at Alpha Futures. We sit down with our traders in person and get them to break down their strategies, their entries, exits, and risk management to extract value to help you as a trader. Hello and welcome back to the Alpha Futures YouTube channel. Here we have the amazing Keagan, 18 years old, already a 5-figure payout trader, which is incredible. And he just made over 3K on this trade right now while he's here shooting his podcast. So we thought we'd have to go through it and he can explain to us how he did it. So yeah, take it away, man.
Yeah, so initially coming into today, what I was noticing is on the 4-hour time frame, we are simply inside of this 4-hour bullish fair value gap. So until this breaks, this is my condition. And if this breaks, I'm now bearish because this is what is keeping me bullish for the day, simply.
Okay. And why not the one above it? Like, because some people say that, you know, there's a bit of a gap sort of in there.
Yeah, so initially what I always look for is, are there series of gaps together? And I don't just count this one as a gap.
Okay.
I count all of them as a gap. So they're
nice.
the whole series of gaps for me.
I like it, yeah.
Okay, so until all of these get inversed and close through, I'm still remaining bullish. And where is my target? Simply London or Asia session highs. However, if they're taken out, my target's going to be previous day highs. So coming into New York AM, all I was literally looking at is what draws and liquidity do we have that match up with my higher time frame bias, which was above. London session highs is quite simply, which was right up here. Because if I turn on this indicator, you can see this marks it all out for me.
Amazing.
London session highs up here. So this was my target for the day. So coming into open, you can see initially we had a massive move down, which was the manipulation lower to come and take out all of this sell side liquidity down here. Along with that, we also had a bullish SMT with these lows down here with the S. And what did I notice? Once we swept out this external liquidity, all I wanted to see is the highest time frame inversion of a current trading leg. Okay, so this current trading leg down here from open that swept out this liquidity was the 5-minute, but we didn't get that inverse and we kept chopping around. Over here, we got a 3-minute inverse. However, we ended up taking the high and this would have been break even. But we created a new trading leg, and the highest time frame in that new trading leg, which was going towards my drawn liquidity, which was above, was this 5-minute bearish fair value gap. So once that got closed above, like it did here, I entered for a long position, and simply I put my stop loss at the lows, and I didn't go break even in this. My normal break even point would be this first initial swing high, but I didn't go break even because there was trendline liquidity above. From my experience in the markets, trendline liquidity is a strong drawn liquidity and should get ran more often than not.
Nice.
So I said to myself, if I go break even at this high and it ends up being a loss, will I be mad at myself? And the answer was yes, because I shouldn't go break even at this high. Okay, so all I did was took 90% of my profits off at this high and literally just held a runner to London highs. And this secured me a little over $3,000.
Wow, man, that's fantastic. So the SMT at the bottom, do you have like the ES chart up when you trade all the time? You just sort of flick between the two of them?
I just flick between the two of them.
Okay. And like every few minutes, every 5 minutes, like how do you know when to check it if they're not right next to each other?
So when I'm looking for my entry, so it would be about here. Is there an SMT that is against me? So if I'm entering into a long position and there's an SMT with the highs, that would put me off and maybe make me de-risk my position.
Okay.
But if there's an SMT at the lows, which is going along with my drawn liquidity higher, that will make me think, okay, I'm going to go full normal risk.
Okay, so you know to check for the SMT once you're happy it's met the other criteria for the trade, right?
Exactly, yeah. And this is a very clean trade, you know, singular fair value gap, and we just straight up V-shape for it. You can see it almost, if I get like a path tool, you can almost see it come straight down and straight back up. Like the momentum for this was unreal. And yeah, with this trendline liquidity above and London highs being my drawn liquidity, I was just very certain this was going to be a winning trade, which it was.
Wow.
And we also created another SMT with these lows down here. So when we had these two SMTs together, I literally said downstairs, there's no way this stops me out.
Wow. Well, it came close, man.
Yeah, literally a point away. But I was just so confident in the drawn liquidity.
That's impressive. I think it comes down to what we were saying in the podcast about like confidence coming from seeing the setup and having the data, right?
Yeah,
because
exactly.
That's the difference between saying I'm confident just because I feel confident. It's saying I'm confident because of these reasons, right?
Yeah.
These reasons that are back tested and I know what to look out for.
Mm-hmm.
And the timing in which this happened, is that sort of the time that you would normally trade, right?
Yeah,
like
exactly.
Just at New York Open. So you've got that extra confluence, right?
Exactly. And like I said on the podcast, the main move I find happens during the New York AM session. So whatever my draw on liquidity is for the day, that will typically be met during the New York AM session, which this was towards London highs up here. And it happened pretty fast.
Played out perfectly. So, and you said before about how important the higher time frame bias is. What would you have needed to see on that higher time frame to switch your bias the other way? So you said if you close below that 4 hour fair value gap?
Yeah, so if we close below this 4 hour fair value gap down here, my bias would have been flipped to bearish. And what would have helped go along with that is if we had a bearish SMT with the session highs coming into open. So we have Asia highs right here, and we have London highs right here.
Yep.
If ES had taken out Asia highs and created a bearish SMT with London highs, that would have also made my bias bearish towards previous week lows, for example.
That's super interesting. And how do you kind of balance up the different confluences, right? Because say you'd had that same SMT, but then you had the bullish SMT at the bottom. Would you just say, I'm not as confident, so I'll risk slightly less? Or what would you have needed to see to completely invalidate the setup?
I'll look for SMTs at session highs on those. If there's a SMT at this session high, for example, my bias is automatically bearish. If there's an SMT at the session lows and the session highs, what would I look for? Okay, so I don't currently have a bias with that. I will look for the 4 hour time frame and see what fair value gaps we're respecting versus disrespecting. So I can see we're respecting this one down here. We're disrespecting these gaps over here because obviously we're just shooting through them and just displacing towards buy side.
Yeah.
So I can say for the time being, okay, we're disrespecting bearish and respecting bullish. So order flow is still bullish overall as we are still on the buy side of the curve towards all-time highs up here.
Incredible. And on the 5 minute time frame, was that the time frame that you actually executed on? Yeah.
Yeah, I executed on the 5 minute time frame.
So you entered and then you were getting that SMT. At what point do you sort of know, okay, this SMT is sort of holding, if that makes sense? So ES took out the lows. This one, was it after you printed that second, like the bullish candle, you're like, okay, that low's kind of in now, right?
See this bearish candle here?
Yeah.
As soon as that came down and had the SMT, we also created another SMT with another low all the way back here. And I went on the 1 minute time frame, and all I saw was what I call a confirmation setup. And all that is, if we inverse the 5 minute, and without hitting the previous swing low, we get another fair value gap inside of it, which was this 1 minute here. So I was confident we was going to definitely go up as soon as this candle printed and it inversed this bearish fair value gap over here. Because now I think, okay, we've inversed everything in the previous leg, which was the 5 minute, and we've inversed everything in the new leg, which is the 1 minute. So there is little to no chance it keeps going down, especially after we put in the SMT.
Wow, man. That's super nice. And a very precise exit, right? That's the thing. It's quite incredible how the market can hit these levels and just sort of turn around.
Yeah.
But that's where the backtesting and stuff comes in, right? It's how
exactly.
you know what to target. With that being said, what's your thoughts on fixed risk to reward ratio versus actually having technical targets like this?
It's a difficult one, really, because there are times that I will have to target like a 0.6 risk to reward, and there'll be times that I can target a 1 to 3. It all depends on liquidity. And I think aiming for liquidity makes more sense than fixed risk to reward, simply because the market runs on liquidity, okay? And as you can see, it hit London highs, which clearly was the objective for the day, and it's reversed. So if I wanted to aim for, let's say, like a 1 to 3, well, I nearly stopped out on this, you know?
Yeah.
So that's why I always target liquidity rather than fixed risk to reward.
I completely and utterly agree. My general philosophy on this is your reasons for exiting a trade should be as complex as your reasons for entering it, right? There should be as much thought put into one as the other. And I think that's sometimes where people kind of mess up, is that they'll say, oh, I got into it because we had this bullish 4 hour fair value gap that's being respected. We had this SMT with the ES. We had this level of liquidity that was taken. We had an inversion. We had this liquidity to target, blah, 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 blah. So these orders that I entered, why did you exit? We hit 2R. It's just like, if you're that confident and you're this good at precise and saying, I think price should go from here, you should also be able to say, I think price should go to here.
Yeah, exactly.
Right?
Each trade should tell a story.
Yes.
There should be a reason for your take profit, a reason for your entry, and a reason for your stop loss.
Yes.
Like this trade. This was, honestly, probably one of my favourite trades of the month. And this literally lined up perfectly for me.
And it was funny, it happened like half an hour ago, whenever it was, 1 hour ago.
Yeah.
That's so sick. But yeah, no, I completely agree. I think technical targets for exits is the way to go. And yeah, like sometimes it means, oh, well, the next draw on liquidity is only 0.8 R away. But in the long term, at least you're doing something that has some rationale behind it.
Exactly, because if it's the target, it's the target. If that's the real target that price wants to aim for, it should hit that in reverse.
Yeah.
So why am I going to hold beyond that?
Exactly. Or why would you cut it shorter than that just because you've hit 1 R or 2 R or whatever your sort of arbitrary target is, right?
Yeah.
So no, I completely agree. So there was one other trade as well you said before. This was a similar type of setup.
Yeah, very similar to me.
Well, I hope they're similar because you seem to be very quite specific about what you want to see, right? And that's the way this should work. Is you've got an idea. Here's my setup.
Yeah, definitely.
We take it when we get it.
So this was a couple of weeks ago. 2 weeks ago, this setup was, and it's pretty similar to the first one. We had a 5-minute inversion. Bear in mind, I take 1 minute, 2 minute, 3 minute, and 5 minute and 15-minute inversions, depending on which sort of happens first.
Okay.
This
so
one was
you start on the higher and go lower, or you?
I prefer 1 minute entries.
Okay, nice.
But let's say we have a 1 minute that's overlapping this 5 here. So say in this trading leg right here, for example, whatever's the highest time frame in this trading leg to my draw on liquidity, which happened to be previous day highs here, that's what I'll take. So if we had a 1 minute lower down, I'd wait for the 5.
That's nice. That's smart. Yeah, it stops you from getting in too early or getting full signals and stuff.
Exactly. Yeah, exactly. Because there'll be times that price wants to maybe temporarily come up to tap this 5 minute, and then it'll just continue going down. So I always wait for the highest time frame inversion in that trading leg.
Nice. And then they said that you got the close above the inversion and...
Yeah, and literally just holding to previous day highs. So my thought process behind this trade was open happened right here, and instantly what I wanted to see was us dump it open and either take out some internal lows or create a bullish SMT. And ES took out this low and created this 5 minute gap. So I said to myself, okay, does this low make sense to have an SMT at? And it did, because at the time this was a 15-minute low in a fair value gap, which it's a strong draw on liquidity, but when either NQ or ES re-hits that low in the fair value gap, that new low is a protected low and it should not be revisited. So I said to myself, okay, if we create an SMT at this low, the chance of this low being revisited is sub 10%.
Wow.
So
gives you the confidence to cover that with your stop loss. Having a reason for a stop loss. If some people are like, oh, I just take a 5-point stop loss, I take like a 10-point stop. Again, like the stop loss should go below the point where your trade is no longer valid, right? And
exactly.
Your target should be at the point where price should be getting to. And again, the exit, look at the precision, man. Like,
yeah, literally, I top ticked it. It hit it literally within 2 points, and it just came all the way back down to where my stop loss would have been.
Yeah, and again, if you just sort of picked a random sort of arbitrary, I take it off at 3R.
Yeah,
probably would have got pretty close, and then
even 2R, like.
Oh yeah.
If you even aimed for 2R here, you would have.
Yeah.
Got stopped out.
This is it.
So that's why I always say, aim for liquidity.
Yeah, that's it. So having a plan that tells you what you need to see to get in, but also where you should be getting out.
Exactly.
Right? Super important.
Yeah, that's the most important thing by far.
That's amazing. Well, I think that's super useful, man. Beneficial to people. And again, I mean, you said that you have a Discord and you kind of go through all this stuff as well.
Yeah. Official AK Futures on Instagram and on YouTube as well, AK Futures. We post all of our content there. We have our links and everything. Amazing. And he's done it live today, guys, for us. So what can we say? Proof's in the pudding. So great work, man. And if you guys found this interesting and educational, subscribe for more breakdowns like this from successful, profitable traders. And we'll see you guys in the next video.